I'm Ian Bush. I'm from the Bush Realty Group, and today my session is going to be on financing. And I've invited Melissa Bell from our Mclean Mortgage partner to join me, and so thank you for coming.
Well, thank you for having me, Ian.
So today, I think what we wanted to talk about was things like, what the financing process typically entails, what a first-time home buyer might expect, what may be some special things and maybe some tips. Maybe we'll talk a little bit about interest rates, those types of things. Okay. So why don't we start with the financing process?
Okay.
So tell me a little bit about it.
Well, what we like to do is to actually get your borrower or your buyer pre-approved before you take them out. And we can meet in person, we can do it over the phone, or we can do it online, and it really depends on their preference. Some people do like the old school, be able to come in and talk to you. And that will take maybe 30 minutes to an hour if we meet in person, 15 minutes if it's online. And we go through their finances, and by that we look at their credit report. We make sure that there's enough income to warrant what they're wanting to purchase. But on the credit piece, we kind of go into detail and make sure that they're not overextending themselves in different aspects. And they would get us income documents, which would be typically 2 years worth of tax returns and W-2s. 2 months worth of bank statements and or retirement funds, depending upon what they're pulling from to put for their down payment. And just trying to figure out what their needs and wants are. A lot of people in this area are able to afford more than they want to purchase, which is always a good thing.
Wow, yeah.
But so we will give what their desired payment is and work backwards from that piece. Okay.
Well, yeah, because I'm a specialist in Loudoun, and I really want to focus on Loudoun buyers, and particularly Western Loudoun. And there's a lot of very expensive property out there, and so definitely I guess it's kind of good to have a partner in that transaction. For us here at Keller Williams, we're trying to give them that whole package. We have a finance, and then we've got a closing title company, and and then us, and trying to get that whole service together. So let's talk a little bit about first-time home buyers. So, we do have people that, are coming into the market for the first time. I remember when I bought my house back in, my first house, I think it was in 97, and it was $154,000. It was a nice townhouse in Eastern Loudoun. I don't think you find many of those anymore in Eastern Loudoun.
Anywhere in Loudoun for that matter. I think it's difficult.
Right.
But for first-time home buyers, I actually love them because they don't have the preconception of what we have used for a home loan before. Prior to the mortgage meltdown, if you had a pulse typically and you had a job, you got a loan. Now the guidelines are a little bit more stringent, and we do document everything. If we see deposits on bank statements, we have to ask where those are from. We have to make sure they're not a gift. But we try to educate them to make it as smooth of a process and as less painful as we can make the process. But really, our buyers are well educated. They look online, they search. A lot of them know what they want to see before they even come to you. A lot of times they want to know if they want, a lot of them think they want an FHA loan. This is where we kind of educate them and say, well, maybe if you had an extra 1.5%, we could go conventional. You wouldn't have the mortgage insurance that you would have on FHA. Because FHA mortgage insurance lasts for the life of the loan. So for us, we try to educate them on different products.
You're educating me. I mean, there's a lot of things you're talking about that I'm like, wow, I've never heard that before.
So 5% down we can do with no mortgage insurance.
Wow.
They may have a little bit higher of a rate, but then it could save you hundreds of dollars. So let's take a $325,000 loan or purchase price. On an FHA loan, that mortgage insurance is close to $400 a month.
Wow.
On that price point, that's a car loan. I don't want to have another car loan. You don't either, right?
Right.
So if they would save an extra $5,000, then we could go conventional and their payment be the $400 less.
Wow.
So with that education, it also helps you because sometimes we can go up in price point. Because $325 house looks much different than a $375 or $400. And they may be able to get what they really want in a higher priced home with a payment that's what an FHA loan would be.
Do you have any recent examples?
I do. On an FHA loan, if you put 3.5% down, your total payment with the mortgage insurance, taxes, and insurance, doesn't include your HOA fees, is $2,200.
Okay.
If we bump that to a $450,000 purchase price, with 10% down, the total payment with taxes, insurance, the taxes and insurance is $24.70 a
Okay.
month. So you can see where you can whittle your way into a much bigger property.
Sure.
With, not that much more money down.
And I would say that, especially in Loudoun, from what we've seen in the properties, that's that's a huge opportunity.
Mm-hmm.
You go from something that's very, basic to something that has some nicer features, maybe upgraded countertops or nicer appliances or, maybe even a finished basement, that kind of thing.
And newer.
Yeah, and newer for sure.
And in areas that people, that newer areas that people really want to be in. So it's definitely, I think that they just need to get with a lender that can educate them.
Okay. So, I asked you about recent examples. I've been talking to someone recently who has a couple of other properties. So they own a piece of property in another state, and then they lived in another state, and now they're renting here, and they're saying, I want to buy a house, but I've got this other property that's in this other state, so how did I know I kind of threw you a curveball here, but what do you guys look for when you do that? As far as, and especially because it's outside of our market area, and we've got to understand that other property that they own in another state.
Are they renting the current property in the other state?
They are not. Yeah, so that's a good question. I don't think I've asked them that question, but what would that speak to?
Well, if they rent it, we get their tax returns because everything is, the tax returns tell a story to us.
Sure.
And we can use the rent that they've got, that they put on their Schedule E's, which is on the tax return.
Mm-hmm.
If not, the income threshold for this area is much higher than other areas,
Right.
and they may be able to qualify to purchase with this other home, even if it was considered a second home, if they were going down, if it was in the mountains of Tennessee or on the beach. I'm not sure where the property is,
Right.
but sometimes people do qualify and they don't think that they do.
I'm not sure which I'd prefer. Do you prefer the beach or the mountains of Tennessee?
Well, I would prefer the beach because my family lives in the mountains of
there you
Tennessee,
go.
so I have a free place to stay there. But it's either one. We just have to look at their whole picture to be able to talk to them about it.
Yeah, so it doesn't really matter where it is. It's really looking at the income that's on the property and then, what the position is on that property so we can understand what they can afford and how they can afford it and, and that kind of thing.
And
So,
the one thing is, and this is an education piece for both of us,
Sure.
when people say that they rent out their home, it could be next door, it could be in California. They may say, well, I get $2,000 a month and my mortgage is $18,000, so my profit is $200,000. Well, when I look at my book, the tax returns, we see that they write off a lot.
Right.
So their net rent may not be the positive $200. It could be a negative $500 because when you take, like if you had a condo and your condo fees are $400 a month, that's not included in what you're thinking that you're profiting.
Right.
So I always like to see the tax returns for rentals and for self-employed buyers.
Okay. And I guess, gosh, you're leading me all over the place because we got another thought. So recently I talked to a gentleman who had looked at doing a bigger property. So he currently lives in a property that's, $800,000, wants to move up to the next level, but he's self-employed.
Okay.
And his wife is self-employed, and both of them, so, the questions are, what do you look for there? Does it, because I know that back in, as you said, when the meltdown happened, so many people were doing stated income, well, here's how much I make, and the underwriters were kind of looking the other way. So what does that look like today for self-employed?
The self-employed, and I'm not trying to scare anybody off, but we're a little bit tighter with them because when you and I basically are self-employed, let's face it,
Right.
and we will earn commissions, an X amount. Well, we have expenses
Right.
that we write off, whereas someone else that may have a W-2 job, their expenses are already taken care of for them, and that's
Sure.
why they get this base pay. So we have to look at the full tax return to see what all they do write off. There may be mileage that they write off. We can write some of that back in. Depreciation and depletion, we can write some of that back in.
Okay.
So there's things that we can add in, but then a lot of people, I don't want to say have complicated tax returns, detailed tax returns.
Right.
And that's when we really want to look at those because you may, your business may gross $500,000, but after you take all of your expenses, you're left with $100,000. So $100,000 income is probably not going to buy $1 million house.
Right.
And that's where we just need to really look at them before they go out and purchase.
Yeah, you gave me a couple good categories there too, because you did speak to, things like deductible expenses that they might be able to add back into the income, so the bottom line doesn't look quite as bad.
Correct.
But it's sort of a case by case scenario. Bring in your tax returns, let's talk, and we'll figure out what we can do.
See, and I had one that if we would not have brought them in, they would have gone out and looked for a house much larger than what they could afford because they were self-employed, S Corp. I would not have thought in a million years that they would have written off unreimbursed business expenses on their personal returns. Well, the unreimbursed business expenses were to the tune of $24,000 a year. So that $2,000 a month, because that's basically what it averages, it was taken off of their income, and that totally put them in a different bracket as to what they could afford. So it really is beneficial for them to be able to come in and speak with a lender about what they truly can afford. Now, someone like your client he probably knows what he can or can't afford. Some of them do, some of them don't.
Right.
But it's good for them to make sure that they've seen a lender and the lenders review their tax returns.
Okay. Let's talk about timelines. So what's the timeline of a process? We talk a lot in our business about having, there's the terms that people use, pre-qualification or pre-approved. We've really stated, I believe it's pre-approved, and we want a pre-approved letter. So what is the timeline for getting pre-approval prior to buying a house?
If I can speak to them, if I know that we need something, within an hour, I can get the approval done.
Okay.
A lot of times people will prefer to do it at night when they get home. They get their kids to bed, and I will have it before they wake up the next morning. I'll get the approval. If there's some questions, I may just shoot them an email and say, hey, can we talk? So we know we're both on the same page about what you're going to do, because they may not list in there that they're selling their home, or I may be able to tell them that they don't have to sell their home to be able to do this. And the actual, from the time that we issue the pre-approval to you getting financing contingency removal, if they've written on a house, we can make that happen as quickly as you need.
Okay.
I like to say that 14 days is sufficient.
Okay.
And it depends on how the borrower, or the buyer for you, works. If they are very detailed and can get us the information in a timely manner, it goes by much better.
Okay.
Matt and I have one that we submitted it for full approval and got it clear to close within 7 business days.
Wow.
The borrower was truly committed to getting us what we needed in a timely fashion. And then you have some that are like, well, I've got my kid's baseball game tonight, I'll get it to you over the weekend. So that's where we're differing in the times.
Right. Okay. Yeah, so that sounds great. It's kind of quick pre-approval, and we'll have a letter in hand. We can submit a fully qualified offer, so it's not going to be, with lots of contingencies, and it sounds like you're able to sort of process the whole thing really, quickly as well. So, okay, so I guess to close, do you have any other tips, anything that somebody, may want to consider, in the process of financing a home?
Yes, we have this great program,
Okay.
Loan First, and you may not be familiar with it. What we do is we take someone that is just starting in the process, and we actually take them without a contract, and we pretend, that's the word I'm going to use, that they have a contract. We submit them to full-fledged underwriting.
Oh.
So while they are in the process of shopping or trying to figure out what they want and where they want to be, we can get them fully approved. Not approval, pre-approval, but it's fully approved. Underwriter has reviewed it, and sometimes, depending on how this market is, they could have a full commitment letter, and the only thing we're missing is a contract, insurance, appraisal, and title.
Wow.
And you probably would win an offer if you went in and said, here's this certificate by Mclean Mortgage that the only thing we need are these 4 things. And if you were in a bidding war, you could almost go in with no contingencies minus the appraisal.
Right.
So that's just it's a phenomenal piece that we offer, just because the purchase market here can be kind of crazy, where the people are doing multiple offers. And if you have someone that's been through underwriting, the seller is not going to be worried about financing falling through.
And that's called Loan First, you
Loan
said?
First. And I can get you some documentation on that too.
Okay, and I'd love to share that with the folks that come to my website and also check us out on Facebook and other places.
Okay.
So, okay, well, thank you for all the tips. We'll be sharing probably some additional information out on Facebook and on the website, in the near future regarding the financing process. And thank you, Melissa, for joining me today.
Thank you for having me.